Welcome back to my YouTube channel. So in this video we are going to cover NBFC's amendment part, and all the rates and limits in NBFCs will be covered in this video. So make sure that you watch this video till the end, and if this video was helpful, please don't forget to hit the subscribe button. So first and foremost, there is an amendment in net own funds. Okay, so let's see. So this is for NBFCs which are already existing. Okay, any new NBFC which is incorporating now, they have to have a net own funds of 10 crores. Okay, but for already existing NBFCs, that is for NBFC, ICC, NBFC, MFI, NBFC factor, there is a cushion period that is being given. Okay, let's see. So NBFC, ICC, if you see the current net own funds is 2 crores, they have to increase that to 5 crores by 31st March 2025. Okay, and they have to increase it to 10 crores by 31st March 2027. Okay, so the same goes with NBFC, MFI. Currently the net own funds is 5 crores. They have to increase that to 7 crores by 2025, and they have to increase that to 10 crores to on by 31st March 2027. Okay, this is an amendment part and very important. So wherever you see infrastructure finance companies, infrastructure debt fund, okay, the net own funds there is 300 crores. So in case of infrastructure, the net own funds is very high, that is 300 crores. So even that is also amendment. Okay, now capital adequacy ratio. So how do you get capital adequacy ratio? That is by dividing your capital tier 1 plus tier 2 divided by risk weighted assets plus off balance sheet items. You will get capital adequacy ratio. Okay, the standard says that in this chapter it says that the minimum capital adequacy ratio should be 15%. You know, your tier 1 and tier 2 capital should be 15%. Okay, but out of which tier 1 capital should be 10%. Here tier 1 and tier 2 both including should be 15%, but akela if you see tier 1, no, it should be a minimum of 10% out of this 15. Okay, and then if the business is into gold jewelry, then that 10% will increase to 12%. Okay, tier 1 capital should be 12%. I hope this point is very clear. Great. And now risk weights. Okay, risk weights, you know, instead of me telling, you can pause and watch this. You will get more clarity. Okay, so for all these assets, no, cash, approved security, loans and advances, TDS, advance tax, interest on government security, funds based on central government guarantee advances, there is no risk weight to it though, so the percentage is 0. Okay, and then comes two of them. You know, one is central government guarantee, where the default period is less than 90 days. This is the catch, don't forget, default period less than 90 days, the risk weight is 20%. Okay, and then the other one is, you know, public sector bank bonds, the rate is 20%. You have to remember, you don't have any choice. So 220 okay, and then 250s. First one is, you know, public private partnership and post commercial operations where date of infrastructure existing for more than 1 year. Remember that one. Okay, so for these two it is 50%. Okay, then these two are the amendment part, again very important. So consumer credit exposure, retail loan, we are only talking about the retail loan, we are not talking about the housing loans, you know, vehicle loans, where it is secure, where security is given. So for we are not talking about them, so we are only talking about retail loan where the risk weight is 125%. Okay, which is more than 100. Okay, and then credit card receivables also, the risk weight is 125%. Okay, so remember these two are amendment part again, and all others which are not covered above, no, the risk weight is 100%. Okay, so pause it, make sure that you look at all these risk weights again. And then the next one is your assets classification. I'll give you a timeline. Okay, whenever any asset is there, no, so from here if you see up to 180 days, no, it becomes your standard assets. So this is your standard asset up to 180 days. Okay, and then after 180 days, no, it becomes substandard. It is classified as NPA here if it is still due. Even after 180 days, if any account is due and the amount is not paid, then it will be classified as NPA. Okay, so it will be under substandard for a period of 18 or 12 months. Okay, I'll tell you for what it is 18 and for what it is 12. So up to 18 and 12 months it will be classified as substandard. After that it becomes doubtful. Okay, here it becomes doubtful. I hope this point is clear now. Okay, let's try and understand. So here 18 and 12 I said, no, so for 12 months is for middle layer and above. So NBFCs are categorized into 4 layers, right? So for middle and above layer it is only 12 months. Okay, for base layer it is 18 months. Okay, that's it. That is what you have to remember in this timeline. So 180 days is something that you have to remember, and then 18 months is again you have to remember. 180 days, if the account is if the amount is still due for period more than 180 days, it will be classified as NPA, and then it will, from standard to it becomes substandard. Okay, and then under substandard it will be for a period of 18 or 12 months. Okay, and then that becomes your doubtful. Perfect, let's move forward. That is what I've given here, you can just read it. and then provision. So provision, you will, based on the standard, substandard, doubtful and loss assets, you will even give a provision to it. Okay, so for standard assets, there are two types again. So base layer and then middle layer and above layer. So for base layer, all NBFCs will be divided into two parts: base layer NBFCs and middle layer and above NBFCs. Okay, so for base layer, the risk rate is 0.25%, and for middle layer and above, it is 0.4%. See, we are talking about standard assets. So standard assets में उतना risk नहीं होता. It is not classified as NPA yet. Okay, so it's still standard. Okay, standard assets is not classified as NPA yet. After 180 days, it will be classified as NPA. So that's the reason the provision rate is also very less. 0.25% for base layer, 0.4% for NBFCs middle layer and above. Okay, I hope this point is also very clear. Now you are coming to substandard assets. For all substandard assets, the rate is 10%. Remember, you have to remember, you have no other choice. Okay, 10% ho gaya. Next is your 20%. Let's see. So then after substandard, your substandard is over 10% provision, and then comes your doubtful assets. Okay, and then doubtful, now if it is doubtful for a period of 1 year, then the rate is 20%. Up to 1 year it is 20%. 1 to 3 years it is 30%, and then more than 3 years it is 50%. Okay, there is no 40% in this. 10 हो गया, 20 हो गया, 30 हो गया, but 40 नहीं है, 50 directly. Okay, but ये remember करना ज़रूरी है. Up to 1 year it is 20%, 1 to 3 years it is 30%, and more than 3 years it is 50%. Okay, then comes this too. If it is unsecured, again 100% डाल दो. Loss assets को भी 100%. There is no change. Okay, great. And then the time limit, again this is an amendment. NPA time limit, as we said, after 180 days it will be treated as NPA, right? So they are bringing down this 180 days to 90 days. That is the amendment. Okay, but again the cushion period is given. Okay, currently it is 180 days. Okay, by 31st March 2024, you have to bring that down to 150 days. If any account is due for period more than 150 days, then it will be classified as NPA. Okay, again on 31st March 2025, it is 120 days, and then by 31st March 2026 you have to bring this down to 90 days. Okay, so let's see. Here also we have seen this timeline for net own funds, right? Here the year is 31st March 27, and here if you see the year is 31st March 26. Don't make a mistake here. There's a high chance of you making a mistake or getting confused during the exam. So please make sure that you watch this video 2 to 3 times. This video will be very helpful one day before the exam. So we have covered everything, and NBFC is having a lot of amendments, and make sure that you're not missing out on anything. So even from MCQ standpoint also, you can expect a question here. Okay, so with this I'll end this video, and if this video was helpful, please do subscribe and show some support, and thank you all so much. See you all in another video.